Robinhood stock has been on an absolute tear lately, and it's starting to feel like the market is finally waking up to the company's potential. Over the past week alone, Hood has climbed nearly 9%, and if you zoom out over the past month, the stock is up more than 40%. That kind of movement isn't random, it's not a meme pump, and it's not just riding the broader market trend. There are concrete catalysts behind this momentum, and quite a few reasons why some investors are beginning to look at Robinhood not just as a trading app, but as a serious fintech contender and potentially even a crypto infrastructure player. Let's start by unpacking what's been going on. Robinhood recently broke past the $100 barrier and even flirted with new all-time highs, crossing $113 at one point. That kind of price action tends to get attention, especially with trading volume well above its normal average, suggesting real institutional interest, not just retail enthusiasm. So, what's behind this surge? One of the most obvious and immediate drivers is Robinhood's expansion into tokenized assets, particularly for European users. Just a few weeks ago, the company announced that EU users would now be able to trade tokenized versions of US stocks and ETFs, commission-free. We're talking about over 200 stocks and funds, including household names like Nvidia, Apple, Microsoft, and Tesla, now available as blockchain tokens. These aren't meme coins. These are representations of real, underlying shares that can be traded like crypto, with all the accessibility and 24/7 uptime that comes with it. At launch, these tokens are being issued on the Arbitrum blockchain, a popular Layer 2 Ethereum scaling solution known for low fees and fast transactions. But that's just step one. Robinhood plans to migrate these tokens to its own proprietary blockchain, which it's currently building. The goal is ambitious: full 24/7 trading of tokenized assets under their control, with on-chain transparency, near-instant settlement, and potentially global reach. This isn't just innovation for innovation's sake. It solves a real problem. Market hours and geographic restrictions have long kept retail investors outside the US from participating in American markets efficiently. Robinhood's move here could open the floodgates for new users across Europe and eventually beyond. But here's where it gets even more interesting. Robinhood isn't stopping at public companies. They're actively exploring the tokenization of private company shares, including firms like OpenAI and SpaceX. That's groundbreaking. Historically, access to these kinds of high-growth, high-profile startups has been restricted to accredited investors or venture capital funds. If Robinhood can legally and securely tokenize private equity for public trading, it could flip the table on who gets to invest in the future of tech. So on one hand, we're looking at a serious innovation play. But the company isn't just riding a crypto wave, they're backing it up with solid platform growth. In May, Robinhood reported that total assets under custody reached $255 billion, a 10% increase from the prior month. Active funded accounts climbed to nearly 26 million. That shows users aren't just signing up, they're staying, and they're depositing more money. And that's before factoring in any revenue from crypto expansion, staking, or new fee structures that could come with advanced trading tools. Speaking of crypto, Robinhood has also been expanding its crypto footprint aggressively. They've enabled staking options for Ethereum and Solana in the US, allowing users to earn rewards while holding those assets. They also recently completed the acquisition of Bitstamp, one of the oldest and most trusted crypto exchanges globally. That deal brings Robinhood deeper into the European market and gives them a more robust platform to roll out services beyond just tokenized stocks. In terms of perception, this puts Robinhood in a unique position, somewhere between a traditional broker and a next-gen crypto platform. And it's not going unnoticed. Wall Street analysts have begun warming up to the story. Firms like Morgan Stanley, Piper Sandler, and JMP Securities have all raised their price targets recently, citing improving fundamentals, innovation in product offerings, and a compelling user growth trajectory. Some of the new targets range from $110 to $125, which implies there may still be room to run, even after this latest rally. Now, as bullish as all this sounds, it's important to be real about the risks too. The biggest question mark hanging over this entire expansion is regulation. In the US, the SEC has not yet issued clear guidance on tokenized stocks. While Robinhood is launching this feature in Europe, it doesn't mean US regulators aren't paying attention. In fact, the Bank of Lithuania has already initiated a review into Robinhood's tokenized offerings, especially the inclusion of private company tokens like OpenAI and SpaceX, which haven't been officially approved for public trading. The potential upside here is huge, but so is the legal uncertainty. If European or US regulators decide these products cross legal boundaries, Robinhood could be forced to pause or significantly alter the offerings, which would almost certainly spook investors. There's also the risk of user confusion and adoption hurdles. While tokenization sounds futuristic and exciting, the average retail investor may not fully understand how it works. The success of this rollout depends heavily on Robinhood's ability to educate users, build trust, and make the trading experience as seamless as possible. If the system feels too crypto-like, it could alienate traditional stock investors. If it feels too stock-like, it might not appeal to the crypto crowd. Striking that balance will be key. And then there's the technical execution. Building and maintaining a proprietary blockchain capable of handling global asset trading around the clock is a major undertaking. Robinhood has never been known as a blockchain infrastructure company. They'll need top-tier talent and serious investment to pull this off without performance or security issues. Still, the market seems to be placing its bet that they can do it. A major tailwind that may have helped boost sentiment this week is the passage of two pro-crypto bills in the U.S. House, the Clarity Act and the Genius Act. These bills begin to lay the groundwork for formal digital asset frameworks and stablecoin regulation in the U.S. While they haven't passed the Senate yet, their momentum signals that American policymakers may finally be moving toward a more crypto-friendly regulatory stance. And Robinhood, with its blend of traditional finance and crypto access, stands to benefit directly from that shift. One final catalyst to keep an eye on is the potential for S&P 500 inclusion. While Robinhood was passed over again in the most recent reshuffling, it continues to check off more boxes each quarter: strong market cap, rising profitability, and growing user base. Inclusion in the index could bring in billions of dollars in inflows from passive funds and ETFs that track the S&P 500. It's not guaranteed, but it's very much on the radar. So let's pull back and look at the big picture. Robinhood is no longer just the millennial stock app that made headlines during the GameStop and AMC frenzy. It's evolving into a hybrid fintech crypto platform, one that's not afraid to push boundaries. From tokenizing stocks to launching staking services to acquiring global exchanges, Robinhood is making serious moves. The company's long-term success will ultimately come down to three things. First, its ability to execute these innovations without tripping over technical or legal missteps. Second, its ability to grow its user base and revenue in a sustainable, diversified way. And third, its capacity to stay ahead of the curve as the line between traditional and decentralized finance continues to blur. Right now, the momentum is there. The market is paying attention. And while there are certainly risks, both regulatory and technical, the upside potential is hard to ignore. If Robinhood succeeds in pulling this off, it won't just be a comeback story. It'll be a blueprint for what the next generation of financial services could look like. Thanks for tuning in. Make sure to stay subscribed for more updates as this space continues to evolve.